Hello everyone. This is the pre-market report video for 22nd December 2022 in terms of Nifty and Bank Nifty. As we all know, today is the weekly expiry day, and in order to understand what to expect today, it's very important that we must understand what happened yesterday. So quickly in short, what happened yesterday in the Indian market? Early morning around 8:15 a.m. Indian Standard Time, our health minister made this tweet. In that, he said that he was reviewing the pandemic situation with the experts, and he also said that the pandemic was not over yet. This itself kind of created some pressure among the investors. Then regarding the stock market, Nifty did open the gap up of 50 points due to the positive global momentum, but it didn't sustain there and quickly it erased all its gain and traded flat till 12 pm. Then around 12 pm, Ministry announced that they are going to do the random checks in airport to assess the situation. It's kind of created the panic and pushed the Nifty down of over 200 points. Then it slightly recovered, but the aftermath news of 4 China variant case that detected in Gujarat and Odisha kind of erased all the optimism and pushed the Nifty again down. And because of this, just pharma and IT sector closed positive and all other sectors closed negative. Then about FII and DII, it's not that bad. FII net sold shares worth approximately 1120 crore rupees and DII net bought shares worth approximately 1750 crore rupees. Yesterday, just only South Asian countries' major index was down. All others, mainly Western countries, closed overwhelmingly positive. For example, about US market, day before yesterday, after the US market hours, Nike released their earnings report for the November quarter. And in that, they beat the market estimate and they provided the very good future forecast. This changed the momentum of the US market to very bullish, since even the earlier Accenture did deliver the very good quarter results. Because of this, now market becomes positive again and expecting the very good earnings from the companies. Then about the macro, I said yesterday regarding the day before yesterday's reduction in new building permits. Now last night, US National Association of Realtors released the existing home sales data for November month. Again, this too came in favor of the market. Actually, it dropped 7.7% on month-on-month basis and approximately 35% on year-on-year basis. The sales fell for the 10th straight month and this is the longest stretch since 1999. This kind of consistent fall haven't happened even during the 2008 or even for that matter not in 2020. Regarding the numbers, 4.09 million unit sales against the analyst expectation of 4.2 million. But there is one bad macro, that is CP consumer confidence data. The data comes as 108.3 against the analyst expectation of 101. I mean, it's good for economy, it's just bad for present stock market. But because of the other two positivities, last night US market just ignored the conference board consumer confidence data. Anyway, in the end, all three US major index closed really positive. Dow Jones increased by 1.6%, S&P 500 increased by 1.48% and Nasdaq too increased by 1.54%. Regarding oil, USEIA, Energy Information Administration, released the weekly petroleum status report. The inventories fell by over 5 million barrels compared to that of the last week addition of 10 million barrels. So this scarcity increased the crude oil price by nearly 3%. At this time of this video, Brent crude oil increased and traded near 82.5 US dollars per barrel and WTI crude oil increased to 78.5 US dollars per barrel. Dollar index and 10-year treasury bond yield roughly same as day before yesterday. There was no drama there. Basically yesterday both Europe and US market was overwhelmingly positive by expecting the good earning season. But in Indian areas that didn't reflect. Yesterday India's new pandemic worries were still there, so banks closed 1% negative and IT stocks closed positive. Again the same nervousness we can able to see in the SGX Nifty as well. At 3 am Indian Standard Time, it closed at 18,337. For this moment, it's kind of indicating 60 to 70 points gap up opening. But for the return of global momentum to India, at present, market needs some kind of clarity. Like the report or study stating that our vaccine is very effective compared to that of the Chinese vaccine. Or some official positive statement from health minister kind of. Again, as I said, at present based on early morning status, it's indicating 60 to 70 points gap up opening. From here, the market can go either side based upon the news. For example, if the news comes as the number of Chinese variant in India is increased means, then I guess market will react violently by expecting the surge in case. At present, global momentum or any macro or any technical is less significant. Clarity over the new variant and its impact on India is the one market is looking for. Anyway, let's see stock and sector related information. Yesterday, RBI released the last week Monetary Policy Committee meeting minutes. I will provide the report link in the description below. If anyone fancy reading it, please have a look. I will just lay out the summary here. Out of 6 monetary policy members, only one voted against the increasing of interest rate. All other 5 voted in favor of increasing the interest rate by 35 basis points. They also provided the worst case and best case scenario for the next 4 quarters for both inflation and GDP growth rate. In extreme best case, inflation can drop to 2% and in worst case, it can increase up to 9%. If required, please pause it and have a look. Then for GDP growth rate, in extreme worst case, it can drop to 2.5% and in best case, it can increase up to 10%. Again same, if required, please pause it and have a look, since I always fancy to see this kind of future estimation graphs. Regarding the statements, RBI governor mentioned that premature pausing interest rate hike can be a costly mistake and solely is voting in favor of increasing it. And Jayant Verma mentioned that at present the country's growth is extremely fragile and solely voted against increasing the interest rate hike. Then all other meeting minutes were already known positive statements such as no liquidity crunch in banks, credit growth rate was good, GDP was good, etc. Regarding the sectors, Automotive Component Manufacturer Association of India released the report stating that the industry grew by 35% in first half of this financial year. Also, they said that the export was grown by over 8%. This news is really positive for auto component company, provided that there is no pandemic related impact. Then regarding Reliance, Jio Cinema announced that they are going to live stream the IPL player auction on coming Friday. This is positive for Reliance since it's showing that Jio Cinema can become the Indian version of Netflix with sports included. As we already know that they telecasted the FIFA World Cup. Also at present, IPL online broadcasting rights is with Sports 18 app. Again, that is owned by Reliance. So there is a high possibility that Jio Cinema might telecast the upcoming IPL. If it happens, then for sure as a standalone, Jio Cinema becomes the unicorn and then the standalone valuation might go like multi-billion dollars. As a summary, global momentum is good. Even the Indian macro and stock related news were really good. I guess the clarity over the new case increase will dictate the market today. Just for info, at present there is a huge short build-up on Nifty. For you guys understanding, top 3 stocks such as HDFC Bank, HDFC and ICICI Bank alone accounts for 62% weightage in Nifty. And top 7 stocks accounts for over 85% weightage. If required, please pause it and have a look at what are all those stocks. Then about the macros, what we need to look out for today. First at 12:30 AM Indian Standard Time, Q3 UK's GDP. Then in the aftermarket hours at 7 PM Indian Standard Time, US Q3 GDP data. Then the usual US weekly jobless claims data. These 3 are the important global macros that we need to look out for. Coming to technical, everything what we are going to discuss in this section is based on just a daily chart. Regarding the subject, both Nifty and Bank Nifty forms a bearish engulfing candle. And if we consider last 5 trading session, then both forms a falling 3 method formation. This is a very reliable candlestick formation. So as per that, it's more of a bearish signal. About moving averages, for Nifty, because of yesterday's overwhelming negative sentiment, it broke the 50-day exponential moving average, which is 18,224, and thus as a summary, from neutral it turns to sell signal. Then about technical indicators, that too as a summary, it downgraded from sell to strong sell since more number of indicators now are indicating the sell signal. Even RSI turned sell as the value at present is 42.7. For Bank Nifty, still it haven't broke the 50-day moving average, but it just broke the 5, 10 and 20-day moving averages. So as a moving averages summary, it's neutral. However, more technical indicators are indicating the sell signal. Thus, in case of technical indicator summary, it's a strong sell. Regarding RSI, the value is 45, so it's marginal neutral. From options open interest data, at present the put call ratio is 0.482, which is very low. This is the lowest value that I ever saw since I started following the open interest data. So there is a possibility that if sustainable 50-60 points gap opening can immediately turn to our positive of 100 or 200 points. Again, this will happen only if all this new open interest is for this week expiry rather than the next week one. Anyway, from option change in open interest, for Nifty, there was almost no new put options were written yesterday. And significant put options were unwinded between 18,200 to 18,400. More number of new call options added at above 18,200 and maximum new call options added is at 18,300 followed by 18,500 and 18,400. So 18,300 is the immediate resistance, 18,400 is the strong resistance for today. Then based on overall options open interest data, 18,000 got the maximum put options. So 18,000 is the support for today's expiry. Then in case of Bank Nifty, the put call ratio is even worse. It's 0.435 lower than that of the Nifty. From change in open interest, the story is same as Nifty. Significant put options had been unwinded from 43,000 to 43,500. More new call options added between 42,700 to 43,600. Then 43,500 got the more new call options followed by 43,000. So 43,000 is the first hurdle and 43,500 is the strong resistance today. Then based on overall open interest, now 42,000 got the maximum put option open interest. Thus 42,000 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribe the channel and liking the video, so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers educational purpose only. Thanks for watching.